Welcome to A Scrap Life, a podcast solely focused on the hustlers, grinders, operators, and business owners who live and breathe the scrap metal industry every day. Here is your host, Brett Eckhart.
All right, here we go. April 2024, Bulls versus Bears. The market kind of got the best of me last month with Chad had a list of 40 fucking things of why the market was going to be bearish, and he was correct. But every good bull gets a chance as long as you stay fighting. Here we are. Chad's going to be out swinging the red cape, trying to get me to stick him, but I'm gonna do my best. I think the Bulls got a chance in April. Chad, what do you think?
I don't know the data. I got 7 bull points and only 3 bear points. So
Let's go. See, the tide has officially turned. China, I was reading the reports last night. They were coming in. China's GDP is looking better. Their manufacturing index is looking stronger. We won't talk about their housing or the commercial side. We'll just leave all that out. But generally speaking, they figure they're going to hit their targeted, 5% growth rate, and they're going to move the needle, man. They're coming with the vengeance. What do you think?
Well, no, that's a great point. So let's be realistic, though. To call China,
Hey. Why did you go ruin it with fucking charts? I had a good thing going. People were listening. They were believing me that we had a fighting chance to ship scrap to China again, and there you go.
I feel like this market's like the tale of two different markets, meaning international and domestic. This is a Shanghai steel rebar report. Our chart we're looking at, it's down 9% month over month. To me, that's pretty aggressive.
That's not quite bullish chart that we were looking for. And I'm glad you brought up the domestic strength versus the export strength. That it's always good. We always talk about having, two bidders. You need 2 good bidders at the auction to drive the pricing. So, I mean, right now the 2 bidders are lack of supply and a somewhat competitive, or somewhat competitive market for the lack of supply on the domestic side, I guess is how you'd state that. So if we got that export market rolling, man, we'd have a chance. We'd have some strong pricing.
And I don't want to pick on the steel rebar pricing. I assume there's demand in that, but iron ore also had a really rough month. It's down 12%. So you got to assume that there's some correlation there between their steel pricing and their biggest input cost, iron ore.
Yeah, which that probably hurts Australia as much as it does anybody, right? I mean,
yeah, for sure. I mean, Australia is the largest exporter of iron ore. Mostly goes to China. So
when I see that chart, I feel for Australia.
Well, especially you think about just inflation costs. It's around $110 a ton.
Yeah,
it's hard to imagine anything being done for $110 a ton, right?
Yeah, something's got to give there. I mean, I at some point those mines have to just kind of, shut down. They got to start pulling back tonnage. Something's got to give, right, in order to create a little bit of a price action.
Yep. So let's talk about the overall market. I want to get your pulse here. I mean, the Dow Jones just keeps ripping. We're up 3.5% month over month.
Yeah.
Is this just all AI hope, or do you feel like there's some real fundamentals that the market's going to be stronger?
Here's my blue collar redneck Idaho take, right, on the stock market, because I'm not a stock trader by any stretch of the imagination. I can't help but think it's kind of like when people say there's more murders today than there was in 1950, right? Well, there's more people. So, statistics are what they are. And so when people talk about the Dow Jones, at a, whatever, all-time high, S&P all-time highs, right? Or pushing all-time highs. Some of that has to be there's just more money in the system, more dollars, right? Which would drive the stock price, quote unquote, the what it's trading for from a dollar standpoint up. I mean, if you print the kind of money that we've printed and juice the economy the way we've juiced it, I mean, does that mean that the businesses are technically that strong, or does it just mean it's like when somebody tells me, "Oh, my top line is this," and I'm like, "Well, that's great, but what do you make on the bottom line? Like, how much money returns to you at the end of the year?" If the answer is zero, I don't really give a shit what your top line is. Your top line could be, X, Y, Z, and but if none of it comes back to you, like none of it makes it down to the bottom line, then is your company that really that great? I don't know the answer to that, but I guess it probably depends on, the cyclicality of your industry and what's all going on. But it feels like the stock market is like a measure of top line growth, right? Like as small, medium-sized businesses, we're the true measure of does it any of it making it to the bottom line? And that's my take on it. So like when I see stock charts and I see this, like I think that it's good. It's at least the stock market isn't cratering. Like that's not going to be good for anybody in business, but it to me feels like it's a product of just the money printers just, on overdrive.
Well, I tend to agree with you, but I also think that there's a lot of hope that, like for instance, if just Siri became like a chat GBT, that would revolutionize Apple stock in a good way. And at least in my interpretation is when I look at AI, just like the AI videos, like a year ago were awful. And today they're like making whole movies and they're actually pretty good. So I feel like there's a lot of optimism out there that it's going to increase margin because you're going to be able to lower some of your cost on producing things from movies to software to you name it. So
Yeah.
but I certainly don't feel that in the day-to-day economy when you're talking about industrial scrap flow
No,
that.
I feel like we're the measure of the bottom line, right? Like
Yeah.
that's where I'm like where I'm speaking from is I feel like the small, medium-sized businesses, you're the true measure of the bottom line. Like how much of that's making it through the system,
Yeah.
it actually spits out to the greater percentage of the population. And I'm not a believer in, I don't know, like top down, bottom up, whatever fucking economics. I'm just saying like it's hard to measure the economy by the stock market because there's only a limited amount of people that have got a lot of dollars to move around that are actually playing that game. And if AI really does come true, you probably won't be any fucking humans that even play it anymore. It's just going to be computers betting against each other.
Yeah, seriously. I mean, to me, this is really about an inflection point of inflation that we're talking about, right? Like,
Yeah.
there's a lot of businesses I think are trapped between high cost and not be able to push price increases on their finished product. And so, when I think about inflation, one of the biggest drivers I think about is oil, right? And oil did jump around just shy of 6% from $78 to 83 month over month, which I think it's a positive sign for scrap. What do you think?
Yeah, I mean, especially if you're in the OCTG market, right? Like if you're selling scrap into mills that like focus heavily on, OCTG products, right? Whether it's bits and or pipe or, whatever that is, like foundry type, location, people that are focused on that. I feel like if people feel like there's momentum and on the oil side, then especially even on the whether it's even on the price action, but just momentum on the motivation to drill, right? I mean, if people feel like think about the run you could have in oil if Donald Trump gets elected in November, because everybody knows that at least what he says is he's going to turn it back on, right? And that's got to be good for the oil industry, I would think.
Well, wouldn't that hurt prices being more capacity?
Well, I think it opens up the export market harder, right? Is all of a sudden like we were pretty much exporting oil when he was the president. And we've kind of we've now to the point where we're tapping our strategic oil reserves to keep the gas price low because we aren't drilling enough of our own oil. And so if that happens, like I don't know what that does to pricing in dollar terms, but I think it presents a strength for the OCTG on the scrap side for those mills because whether it keeps the oil price down, but if you've got more drills, you've got more piping out there, you've got more rigs, generally speaking, more mining is good for the scrap industry, the way I view it.
Yeah, that's well, certainly on the steel production side, right? They're going
Yeah.
to need more steel products, and
Domestically, it keeps the domestic steel market strong, which we can't. I mean, that doesn't help us on the export side, but it sure doesn't hurt the domestic side.
and I'm surprised when I looked. I guess with scrap being down so much in the month of March, I thought for sure we would see steel utilization rates come down, frankly, because I thought, well, there has to be some outages that are sizable. That's why they're able to push the scrap market down as much as they did,
Yeah.
and we're right around 76% capacity right now in the utilization rate. So I think that's pretty good. So that's interesting to me to see how positive the production levels are.
I mean, that bodes well for at least the short term future for the demand side, right? I mean, which going back to it, if you've got some demand, I mean, and your supply is still lacking, then that's going to what's kind of float the pricing, at least keep it, at a reasonable level to where people can, afford to push back a little bit and say, hey, I can't ship for that, or you know, I can't sell you at that price.
Well, and so like last month this time we were talking about rumors of $800 hot roll, right? And the futures market, like I just checked this morning, they're at 927 for May, 905 for June. So there's some optimism out there, which I think Cleveland Cliffs announced a price increase up 60 at a $900 floor. You never know what's going to stick and what's not. But the
Yeah.
futures market would say we're we're probably going to be at least at that level.
Well, they're going to float it. They're going to float it and see if they can get it, and then if you bet your ass if they get it, then everybody's going to follow along with that. Like, oh yeah, I like it. That's a great idea.
But I mean, Brett, if you look at these two charts, we're looking at the hot roll coil market for the Midwest and the United States and the Northwest European market.
Yeah.
There's $250 there, like 27%. Like talking about a tale of two different worlds. I mean,
Yeah.
think about the
Well,
scrap guy. I don't know if you are tied into the European scrap market, but I would love to hear from a European scrap vendor what is their flows like, because how are they making $700, $675 hot roll? And with all the inflation that we've had here in the United States, they've had the same thing. How are they getting any scrap in the door?
and probably on a even larger level, like on the inflation side, and even more punishing level. And I think that is painful for them. I think that we'll have a chance to probably hear from those people at ISRI here in a couple weeks, right? Like, I mean, I feel like that discussion will probably be had. And I don't know, that obviously that's on dollar terms, right? So you have to just, I can make the, discern, from their standpoint, what their measure of currency they're using for on their end. But yeah, I feel like our domestic market is still fairly strong. What's driving it to me can only be the fact of the money printers are still ripping. We'll see. I mean, I think they're gonna let those printers print, man. It's an election year and they're not going out without a fight. So them fuckers are gonna print like there ain't no tomorrow. And if it doesn't do the job, then watch out. It's gonna be
Well,
interesting.
I look at this hot roll market and I think, last 2 years the steel mills, and I can't believe I'm saying this, but they've had an okay margin. Not great, but okay.
Yeah.
And this year I think
Okay. Yeah. Just
the
just barely enough to feed the baby. Just trying to keep the baby clothed.
but this year I feel like the margins are going to be compressed, and so now it's okay. Do you just, as a publicly traded company, do you just try to put out enormous volumes to try to offset that, or at least keep volumes what they were historically? And I think I think that the market's trying to find its balance right now.
What role, you being a new steel guy, you understand that. What role does like the 232 tariffs play in that domestic demand and allowing the domestic markets to kind of run on volume, maybe not necessarily margin? Like, does that 232 play a big role in keeping exports out or no?
Well, I think this is a perfect chart for illustrating just that, right? It's 25% tariff and the pricing differential is 27%.
Yeah.
So the US based steel mills know what the export price is and they know exactly where they got to be. And that's, to me, that's the difference here. I don't know. It'd be real. And this would be more of a debate of, but no one would really know. But I think if we didn't have those tariffs, like it's hard to think that our hot roll in the United States wouldn't be in the 700s.
Yeah. Interesting. Another
Yeah, so
probably hotly debated topic that will be coming up. Because, I think it was Trump that put those, it was his
yeah,
administration that put those in place, right?
right.
So, obviously, like that's going to be, a big part of the election campaign focus from our standpoint, right? Like, as the election happens, elections come out, they start talking about, all the sorts of hot button topics, right? And there's probably
Yeah.
only one or two that really apply to you or to me or the next guy. So it's kind of like you're picking your battles and you're gonna have to eat crow on a lot of other stuff to get the one or two things you want, right? So you as a domestic steel, manufacturer, a domestic scrap, consumer, I would have to assume that the 232 is beneficial for
It's
new
God's
steel
gift. It's
manufacturers
God's
as a
gift.
whole. I mean, they're the ones that lobbied so hard for it, right?
I think I think it literally is bringing back U.S. steel manufacturing, right?
Yeah.
Like that's something I talked about recently internally with somebody, my organization, about when you ask most Americans, hey, how big of a steel player is the U.S. in the world? Most would say, yeah, I think we're a pretty big player. And we were 30 years ago. We were the
Yeah.
biggest, right? Us in the Soviet
Yeah.
Union. Today, we're not even like 1/10 the size of China. Like it's not even close.
Yeah.
And so, and I think that's the idea is, hey, if you want to, and think about if Brett and Chad owned a country, we would look at its natural resources and say, steel manufacturing, farming, agriculture, those are the two big ones historically that have driven successful economies. And I don't think China's any different. So
I think that's why so many foreign steel making entities or with interest or whatever want into this market, right? Like that's a big driver is they see that the value in the US market, maybe in the future on the consumption side, the future on the production side. I mean, those are big drivers for our industry and big drivers for export or other countries trying to get into this market, right?
yep.
Something to keep an eye on out there.
Yeah. Well, let's shift gears. I mean, you're the non-ferrous guru and on this podcast. What do you think about copper?
Dude, I feel like we got a little bit of run left in us, right? Like to me, it feels like if we can find some stability around that $4 range like we have as of late, then it's kind of been bouncing around that in between that 390 to 4 and some change. So if that's the floor and if they can continue to hold the line there, I feel like it's like we got a fighting chance to, to push that 410, 420 and this, at least this summer for sure. It depends on what the demand picture looks like. But I was reading an article too. They were talking about, less of the ESG push and less of this, kind of, and I don't know that it's less, maybe it's just not as visible. But I mean, I still believe that there's still a lot of infrastructure money sitting there to be had. And how much of that goes into copper and, electrical grids and whatever else. In order for us to just compete and keep up with the technology, we still have heavy investments in our electrical grid, right? Which requires a lot of copper. But if you look at some of these countries, like if China truly does catch a little wave of growth and they do catch some momentum again, and now they're competing with India, right? And in India is kind of on a growth trajectory that's similar to what China was, say, like in the early 2000s, or at least trying to get there. Well, man, if you got those two countries competing for copper, plus a fairly healthy, or at least somewhat healthy domestic economy here in the U.S., I mean, that bodes well for copper pricing in the medium term, I think.
But it's certainly telling when you steal both. So copper's up around 4.5%, 5% month over month. But what I thought was surprising is aluminum followed it too, right? It's up 4.5%. And
Yeah.
so those, I mean, the shredders, while the ferrous side, I think is a hard business right now, then the non-ferrous side, they should be able to gain some momentum there. So that should be good for the scrap industry.
Yeah, it's just a volume game for them, right? Trying to keep their cost per ton at a reasonable level because they can't get the units, the front end units. Like obviously their back end, their downstream has the technology has came so far, and they've the companies that have made those investments, I think maybe at least in the medium term will eventually pay off if you can get the volume to get through them, right? But
Yeah.
I feel like that's going to be the bigger question for your shredders, especially your big shredders. And these installations in the last, say, couple years have not, I mean, they've only gotten more expensive, right? Plus now you've got EPA pushing, basically dog housing these shredders, right? Which is 2, 3, 4, $5 million to enclose the shredder, and how many of them are going to have to do that? And then that's depending on the volume. I was talking to a shredder operator here the other day, and they were like, yeah, it's like a $3 to $4 million like build out. They're like, we ran our tonnage. That's like a $4 or $5 a ton like cost. I mean, it doesn't make the scrap worth anymore. It doesn't,
Right.
their downstream isn't any cleaner. Like the only purpose is just to encase the actual shredder, and produce, and was it, you would probably know the answer to this, but it's to house and soak up, take in whatever the dust is one of them, and then there's some shit that it's supposedly creating in the air.
Getting all the, what is it, the PVCs and just the organic material in the air
Yeah,
out of the air, right?
volatility, something compounds. I can't remember what the word was. Like I said, I'm not. The shredders aren't my wheelhouse. Other than I love selling to them. They're great consumers of scrap.
Well, I don't know. I feel like we both being in this industry, we probably got a lot of friends that are, I would call metal bugs, right? Gold is
Yes.
getting, I think it's at an all-time high. So it's interesting to see that both copper, aluminum, and gold are all taking a stride higher,
Yeah.
which usually would mean the economy is pretty good. But and obviously the Dow Jones would suggest the same thing. But like you said, the guys on the ground aren't feeling it. It's weird.
Yeah. I mean, I think that, and sometimes it's not necessarily, I wish, I think about it like this. It's hard to go backwards, right? Like if you give somebody a pay raise, right? It's $1 an hour, $2 or 10 or whatever that is. You can't go to them a year later and then say, hey, we want to, like, now the economy softened up, we're going to get you back to that wage you were at before, right? Because
Yeah.
that's about where our business was. But that's essentially what you did when you sent everybody $1,200, $2,000, $4,000 checks in COVID, right? Like you gave them a raise for their lifestyle, so they were able to buy, stuff that they hadn't been able to buy. They were able to like consume better alcohol than they were consuming before, better food, or go to restaurants, or a nicer car, whatever that is, right? And then now you're going to take that back, and you're going to, take it back to, 4 years ago, and say, okay, now you're back to here. You don't have that extra income, right? Well, it changes the dynamic of your whole economy, from, especially if you're a heavily service-based economy. The way I see it, I mean, it's like giving somebody a pay demotion. Like you gave them a promotion and then you took it back. And so are we really that worse off than we were like 3 years ago? Or does it just feel like it because we push so much demand forward, right? And so
Yeah,
maybe
that's
we're
gonna
just
be.
playing that catch-up game. And so I think about it as like, maybe it's just going to take us a couple years to create the demand again, right? I don't know.
I don't think this inflation thing can be over. Like I said, wages have went up, and if you look at the price of wages compared to like your medium household in the United States, it's at all-time highs still, right?
Yeah.
So So that means housing's got to come down, which 410 copper doesn't suggest housing's coming down,
No, no.
or labor's wages got to go up for that to even out. And so,
But you just can't compare a price. It's like, I mean, you and I have had this conversation before. You can't compare a $300 HMS when somebody says, "Oh, the HMS price is $300 or whatever that number is,"
yeah,
right?
right.
If somebody's paying you 300, call me. We'll talk. I'll broker your shit in somewhere else. But but if but people are like, "Oh, you can sell 300, like that's a good price." Like, this ain't 2007. Like, the cost of everything has went up. $300 HMS isn't fucking $300 HMS anymore, right? Like, that's like $200 HMS. And then saying, "Oh, that's a good price," like, all relatively speaking, like, no, it's not. And I think the same thing goes with fucking $4 copper or a dollar aluminum. Like, yeah, it's $4. I'm like, well, have you bought any like insulated wire on the open market lately and felt those margins? Like, that shit's tight, But
I gotta go to my boss today and say, hey, that $7 an hour I'm making, it's just not enough.
yeah, you need to give me the 9. Like, and if not, you have to go to California. You can get $20 an hour. We
At
won't
least.
tell you what the taxes they take out of it, because the only reason they put a minimum wage on it is so they can take the money and keep it, right? Like, their minimum wage is they can tax your ass harder and keep more, right?
I never would have thought of that. All right, let's stay on this non-ferrous train here, but this one's a decrease. So nickel on the LME fell from around down 4.5%. Any insight there, or what do you think's happening here?
I don't. I honestly, I talked to my stainless buyers. I mean, we do like process a decent amount of stainless through here, and I I haven't, the price had come off. Even 304 price got softer by a few cents. And I haven't really got any insight. And to be honest, that one I probably should do some research on. But I definitely saw it in the 304, 316 price. It's felt a little softer lately.
Well, I got two more charts for you. We're gonna switch back to ferrous. One is the turkey. This one I was really surprised by this month. We started at 390. We went all the way down to 376. And now we're back up to 391.
Yeah.
I think what happened here was the turkey steel mills got orders. It's very similar to US. We felt like, hey, scrap wool might be bottoming, and which is interesting because you could say is scrap one of the leading indicators on steel pricing. I don't know, but
Well, I feel like it's going. I mean, it's definitely. Can you imagine like what people used to pay attention to? Like, even say 40 years ago, like the iron ore price, right, was a big driver of steel production and utilization, and which countries were going to be on the on the stronger side of production. I mean, versus today, as people transition to the EAF furnaces and become more scrap dependent. And I think scrap pricing is definitely it's going to take an even larger role in the near future, even compared to iron ore. So yeah, this is a good indicator of maybe, like you said, Turkey caught some orders and going into springtime for and saying, okay, maybe we're gonna get some demand, which is good, especially on the East Coast, and some in the South. I mean, now you got another player in the game. You got you got,
and
you
that's what
got
they
some
need.
options. Shit, there for a while. I saw that post, and Weitzman said he shipped 400 fucking trucks in the last day of the month. I was like, he's trying to get that order out. And and then, because he saw this, right? Like, he's like, oh, March is going to be a bloodbath. Well,
Yeah.
luckily, maybe, guys like that, heavy processors on the East Coast, this is welcome news.
Yeah, absolutely. And it definitely feels like the worm is turning some bit. And here, this chart's pains for me to show you, Brett. And this is the last part,
I
last
love that
bull
you're going to
point,
end
last point here.
best
Just trying to
scrap
help you out.
ever slides on a good note.
All right, so here it is. So this is the Bushling CME futures market. And
Yeah.
I think last month we settled around 413, 414, somewhere in there. Late last week, there were some trades in that 445 range. That's up like $30. So
Yeah, I
prime
like
could be
that green little shoot at the end, like a it was a welcome sign to maybe spring has sprung. We're gonna have some demand for some new steel around here. Let's hope anyways. But yeah, I mean if you got obviously I don't sell much on the bushling side. I mean, you obviously are you pay more attention to that than I do. But that doesn't hurt the cause for guys with shredders, because it's, I know they substitute depending on the pricing, right? And us, poor scrap guys, we're just trying to cut up some HMS. I mean, shit, we're happy to see that bushing price move up. Everybody's got to eat.
well, spring is going to sprung, and you're going to see all kinds of scrap flow. I'm just gonna feel it in my blood.
I can only hope so. I can only hope so. I got a few more trucks to keep loaded, so we can only hope we can get some scrap.
I love it.
All right, man. Anything else? Anything? What are you looking? What are you thinking about April? April feeling like a good month? Good month for
Hey,
us scrap guys.
And at the Easter celebration, we said he has risen, and maybe we might see April do the same thing. You just never know.
Way to tie it into Easter. So I was whoever was out there chasing Easter eggs and found the golden egg, don't be afraid to share. Don't be afraid to share. I got my 14-year-old out there chasing eggs, looking for that golden egg. And luckily, one of the young kids found it.
Well, as long as he understands $300 heavy melt isn't $300 heavy melt anymore, I think we'll be good. We need those
when they opened up and they saw $5, they're like, I thought this was a golden egg. This isn't even a fucking Big Mac anymore. It's like a Big Mac egg. I'm like, yeah, inflation, kids. I'm sorry, that's all I got. All right, man. Until we meet again.
Take care,
Brett.
Brett.
See you next month, and hopefully this bull train keeps on rolling.
Choo choo.
Yeah. All right. Thank you, sir.
All right. See you.